Welcome back, everybody. Starting off this video, I want to take a look at Tuesday's price action. There's a setup on Tuesday that I want to go over with. And we will look at what happened during this week. So starting off, number one, looking at the calendar week, highlighted there is the FOMC and the FOMC press conference, which that was pretty much the biggest rate folder for this week. We anticipated that two-step news release with 2 p.m. giving us an initial move and then 2:30 giving us another move. And if you wanted to take any trades after FOMC, then you would have to look for something after 2:30. That would be where you would be looking to take any potential setups. So moving into this week, my expectation was that Monday might give us a setup. It's a no news day. It's probably going to move pretty slow, typical Monday market conditions. And we would expect some high resistance liquidity runs, but it's early in the week, so we might get something there. Tuesday, I sat down Tuesday. We only had this 1 p.m. folder, which was a medium impact. So I didn't expect anything crazy happening on Tuesday. It would just basically be the 9:30 opening, which I sat down 8:30 and 9:30, and I was looking for something around open to possibly give us some volatility in the market and perhaps form a setup. Wednesday is basically the day of FOMC, the morning. Typically, we just don't take any trades. That's as per ICT's advice as well. That typically on a FOMC morning, we do not take any trades. That AM session, we would be looking to take something after the FOMC release at 2:30. We would be looking for a setup. If you want to trade that, you would have to wait. So obviously coming into Tuesday, I come in with that mindset knowing that it's highly likely that we're going to sit in some sort of a consolidation because the market is anticipating this news release at Wednesday PM session. So they're sitting on the sidelines. Everybody's waiting for this FOMC news release. So there's no big money in the market. So the expectation is that we have a landmine build week. On Thursday, we had PPI, which that is another red folder. And on Friday, 10 a.m., another red folder. So looking at this week overall, it's, in my opinion, would be a landmine week. We have a lot of news events across the board. So if you're going, number one, you're probably going to go in with lower risk management, lower expectations, and you're not going to go in holding firmly to a long-term bias. And we're going to look at session liquidity, most likely. And we're keeping in the back of our mind that it's most likely going to be a lot of consolidation, high resistance liquidity runs, because it's just a red folder messy week. So All right, let's move over to the NAS. We're looking at a 1 minute chart on the NAS 100 over here. Let's go up to a daily and let's just take a look at a price action. Monday morning, now number one, my expectation coming into this week, Friday we closed off inside of this busy, this fair value gap, and we rejected this fair value gap. As you can see, we closed above this fair value gap with Friday's candle's body. And if I take a fib and I overlay a fib from high to low, you can see we just about missed the 25% of this fair value gap. So that indicates bullishness in price. So I came in with bullish expectations. Let's quickly take a glance at the dollar index, see what it was doing. Looking at the dollar index, I have a couple of levels on this chart. Now, this monthly fair value gap, let's just go up and take a look at this. On a monthly fair value gap high, I did have a fair value gap low, and I also did have a consequent encroachment of this monthly fair value gap level. And we've been trading in and around this level. Here's your weekly chart. I have this weekly inversion marked. We already traded through that, by the way. And initially, I was taking a look at this fair value gap here. Now we traded down here, so I only took this low to that high because that's the only remaining part of this that's open, which would have liquidity inside of it. And I believe that I was looking at that. I was looking initially at going short in this market. Now let me see. No. Yeah, that's correct. I was looking at shorts initially because we took out these highs. We traded into this monthly fair value gap high. And we rejected down lower. We rejected away from that. So I came in. I did not sit down Monday morning. I sat down Tuesday morning. So this is what I saw. I saw that we tapped this fair value gap high. We cleared these highs, the relative equal highs. So I was looking for a possible scenario where price would draw down into this daily fair value gap. And then if it wants to get animated for the week, then we're going to go below these lows as well as those over there and then into this weekly fair value gap. Now, the previous week, we reversed on Tuesday, we had a bounce. And I was also looking for price to get below this low. On Tuesday, we had this bounce. Wednesday, we traded up higher. There's a slight SIBI in here, slight fair value gap. One more time, it came down into this tail of this candle. But if we really bring it in, the low of this particular week we had this monthly old low. I believe it was this low right here. If I go up to a monthly, let's just zoom in. See that right there? We stab into that low. See that? We stabbed into that low. And then I also had this tail, and I was looking at this wick of this daily candle as well as a support, which we can see price tapped that, and then that was where we reversed. But we did trade into that monthly old low. I was looking for price to get below this low, and I was looking to see if we were going to get animated and keep on trading lower, which, as you can see, we stagnated right at it and we reversed. So that was basically my initial idea coming into last week. I wanted to see that, especially since we had this huge move down on Monday morning. All right, going back to this week's price action. I was looking at Monday forming this high, tapping this monthly fair value gap high. And then I was looking for price to first of all get back into this busy. And I was looking at the consequent encroachment of this area. I had it on the charts. Got rid of it Thursday morning when I was looking at price action. Had it on charts like that. And this was Wednesday. I believe that moved down. Yeah, it was in the morning. That's correct. That's correct. Massive move down. You can see we have this hourly. I looked at this hourly busy as well. We basically entered into the consequent encroachment of this as well. And then I was looking for price to get back into this gap up here, which we did on Thursday morning. I was looking at that, trading back into this gap. We also had a portion of this left from there to there. We had that portion of this left. And as it kept on going higher, obviously I was eating into this portion of this SIBI and closing that in completely. Quickly going back up to the daily. So that was Wednesday. When I sat down on Thursday, I saw that price traded down into this order block over here. I would personally be looking at this candle over here, this big red candle down. That's a good candidate for an order block. Hits the level, price turns around, goes back into that liquidity, into the rejection blocks, and runs up like nobody's business. So mean threshold of this one, and you can see we didn't really trade into this open of this order block. We basically traded into this wick over here of this candle, and we also had this fair value gap. So whichever way you want to look at that, I like this big down candle because that was formed the low, traded away from it, didn't get right back to that low again. So mean threshold on that, we moved away from it, fair value gap. We closed above consequent encroachment of this. So to me, that was a clear sign of bullishness. So I was looking for price to get up to previous day's high, Tuesday's high, as well as that high over there. That would be relative equal highs. I was looking at that idea, which means futures markets and other currency pairs would be looking for lower prices on Thursday. Coming in Friday, we were moving up, trading higher, So I was looking at price clearing this high, and I had this one marked up, as well as a 4-hour inversion, as well as the 4-hour old high, which is also, we can see a daily high, which we have daily relative highs as well. If we did want to get animated, I remember we traded up. Let's just go look at this on Friday. Let's see, Friday. You can see we were right at this high. We started the day off way down here, and we were really high in for this day. So that's why I wanted to see that weekly old high being targeted. You can see it right there. It's right at that level. See that? Really close to that level. So that's why I had this one, that inversion, as well as that old high. If we did want to get animated and move up higher, then those would be targets. So you really have to look at the dollar index, as dollar index gives you context, and it aids you in your directional bias. And then when you are trading, it's advantageous to then look at the majors, at the 3 majors. Look at NAS, look at ES, and look at the Dow, and see if everything is aligned, and look if they are trading in the same direction, right? If that's the case, and the futures markets are all trading in the same direction, and the dollar index is trading opposite that direction, then you have everything aligned in the market, and you have a symmetrical market, which would mean it's high probability market. If you get a clean setup in that, then that is a good sign that you have a good setup on your hands. Of course, then that you keep in mind that you will have to take a look at your checklist and make sure that everything on your checklist is ticked before you would be able to take that setup. All right, so let's move over to NAS and let's look at what I was looking for NAS. Initially for the NAS, I opened up on higher time frames, and we cleared this high. And since I did expect lower prices at first on dollar index, I wanted it to clear this high. As we can see, we did. And initially I had this bearish idea over here, which it flipped, and I was then looking at higher prices. Anyway, with dollar index, I had this idea in the beginning of the week on futures markets that I wanted to see it come into this fair value gap. I wanted to see it trade down into this fair value gap, and give us lower prices. And that would have been in line with this idea of dollar trading higher later in the week. That should have, in a perfect symmetrical marketplace, should have given me a bearish day on Thursday as well as on Friday for price to trade off lower, which this is a prime example of why you gotta be careful and you gotta look for symmetrical markets. Now, looking at the Dow, we have this structure here where we have a failure swing traded off lower. Really messy week in here too as well. So I was initially looking at this Friday, which we traded into this fair value gap. Mark it out. I was looking at that. It rejected 25% right about. So on Monday, I expected price to trade down lower. Now, this idea aided me in the idea that I wanted to see futures markets give us a trade lower. A part of that was based on this idea over here, that I wanted to see prices come down lower. And YM was the only one that supported this view with this daily fair value gap, it rejecting that last week. If we look at ES, then ES obviously did not support that idea. It respected this daily fair value gap and traded off higher. See how on Thursday and Friday it was really indecisive closes? That's just because we just take a look at a 15. See that? Thursday, right about here, right there. See that? We just had erratic price action. We had a move from right about 9:30. Yeah, there we go. 9:30 traded down, retraced in lunch, another leg down, traded up, and then it just started getting really sloppy in here. Friday. So with this massive rundown in what will basically be the London session at 3:30, running down massively. Usually after a massive move in the morning, we expect chop that following session, and then it would be better to take look at possible setups in the PM session. Anyways, let's jump into NAS. Look at a daily. So on Tuesday, we traded into this pre-value gap. Friday, Tuesday, we traded back into that one more time, and then started moving off of higher. So we have a bullish bias. Looking at dollar, we have traded up and that rejected. Look at a 15. We can see that just seems like dollar was in a sideways consolidation. Let's just look at that. Friday. Okay, let's just see what that was like on a 1 minute. Let's go to Tuesday. Let's do 10 a.m. See if that's going to bring it up. There we go. So that was basically a consolidation. We did, however, trade down over here in this area. But this was basically a sideways consolidation holding pattern. We can go to NAS. Look at that same setup on it. Just see here, Friday still has to go back. T11, let's just give that time. Go back. There we go. It's bringing up Thursday. There we go. Shoot. Still gonna go back. This should be it. Yes, here we go. So there's that sit at exactly 10 a.m. Wasn't the cleanest setup. We had a breaker block, fair value gap, fair value gap. That's a balanced price range. And we have an order block sitting down here. Treated into a daily fair value gap. Targets would be fair value gap up here, relative equal high, old high. We can see that we traded up higher, but we did trade up higher with a high resistance liquidity run, as we can see over here. You took your entry and we sat inside of a consolidation for 3 minutes, started moving, moved again. That is 1 to 2R. And then we have a stop of, it's about 3.5 handles. If you look at the ticks and look at the tick profit, that's about 6.5 handles. 1 to 2, beautiful set. 950, 10, 10 macro. We can just outline these. That's a balanced price range. You can see we tapped into that. Breaker block right there. Order block open. That gives you 3 PDA raise. Stop could be at order block, mean thresh, or at the order block open is good. Since we do have this fair value gap, balanced price range in this area, and we have that order block over here. Note we traded into this daily fair value gap, which that would be the higher time frame PD array, and targets would be this fair value gap, which would be in the upper range from high to low. If you take that, pull a fib, 50% is going to be around here, so that's a beautiful area to take a profit partial above this high right there. Then we would have this old high as well as that old high over here, which you can see both of those targets did end up trading eventually. Market maker buy model, beautiful set. We can just take a look at the Dow for comparison and contrast. Just look at how it was trading at Tuesday at the 10 o'clock. See if we can get a look at this. Should be good to go. Just about. Still loading it up. There we go. I believe this is it. There we go. Same ordeal. We had a slight move lower and then we traded up higher off of that. This is a beautiful area for a take profit. Yeah, that was the high. Fell off after that. Beautiful. And ES had the same setup. The only one was dollar index that sat inside of a consolidation that didn't trade down lower. If dollar index did trade down lower, then we would have had a set where we probably would have had a low resistance liquidity run if dollar was dropping down there. That would not have held futures markets in a sideways, in a holding pattern. So that's a reason why this trade should be one that you take, and then you also scale back your risk because of the fact that it's not as high a probability just because you have DXY sitting in a holding pattern. That's going to give you a hard time on your futures markets as well as other currency pairs for these guys to get a move. We basically utilized the 950 to 1010 macro here, and that gave us a run. That macro gave us a run. It started spooling and traded up higher. And that would be the trade idea. Now, looking at this prior to the 950, I was looking at 850. I was sitting down. I saw that this was a complete mess, so I didn't bother to take any trades at 830. There was nothing present here for me to take anything off. 930 did not present anything. We just had this run up higher. Again, there was nothing for me to key off of in this messy consolidation here that I wanted to be a part of anyway. So I did not take anything in these conditions. I did not take anything. I did see it running up higher. I sat through the macro and I didn't participate just because of the bad market conditions. I was not present. I did, however, see that it started trading down lower. And again, there just was not anything for me to take a trade off of. If you are a order block trader, then you could be looking at this up candle over here. Now, the thing is, there just is not a breaker block. The only breaker block here would be this one. Before we go higher, taking out this liquidity. So that would not classify as a breaker block. And as you can see, we did not get a impulsive move below the breaker block and a trade back into that breaker block. We basically were sitting inside of the breaker block and we tanked down lower. So this is a more advanced type of a breaker block entry, where this is a valid breaker block, and as soon as price is trading inside of this and you know price is going to trade down lower, you can take this entry right there and sit through it trading down lower, which that's just not one of the entry patterns that I use. I like to see that impulsive move below that and that trade back into it. For me, that avoids potential trades where you're going to take this entry and price is just going to continue running up higher and using this as a order block. So I don't like to take those types of setups. I like to see that impulsive move and that trade back into that breaker block. For me personally, that's one that I take a pass on. We also had a inversion over here. If we pull that to the left, we did, however, trade through that and trade back into that. We rejected and we did fall out of bed, trading below this low. If you were in that position, then this would be a beautiful confirmation that we are indeed going to trade now lower. So that's all confirmations that keep you in that trade. Let's just take a frame the risk of this position. Short position, your entry would be in this area. Stop, you would have a inversion. That would be an order block. You have this wick. You could look at 50% consequent encroachment. Stop would have to be above that 50% consequent encroachment for your 3 PDA arrays. So let's just go ahead and let's just draw these out. There's your inversion. Just going to eyeball the consequent encroachment. There's that. Stop needs to be above the consequent encroachment. Has to be above that. Then we also have the order block sitting over here. We can do that in a different color. Let's choose red. That is the order block. And there we go. So inversion, order block, wick, consequent encroachment. 3 PDA arrays, stop goes above these. Now, for this trade to be valid for me, since I was looking for longs, you would have to get a higher time frame PDA array for that to be a valid trade idea. We have a order block on the 15. That would be an order block. Hold on, let me just get that centered. I'll change this back to blue. Back to blue. Let's go ahead and say 15-minute order block. There we go. We can draw back down into a 1 minute. Just give that time to load. So if we have that higher time frame PDA array, here we go. Let's bring that up. So we have that 15-minute order block. There we go. That would be your higher time frame PDA array. You can see that we traded into this and we rejected off it, traded through this fair value gap, which then became a possible inversion. Traded back into that. Notice we have consequent encroachment. Traded right at this level, traded into the order block, and then we fell out of bed. So entry would have to be somewhere around here. As far as macros, this one is right outside the 950 to 1010 macro. As you can see, we just barely were inside of that. This would be more part of the 930 opening where we started then running down lower. So a possible late 930 opening entry. And then as this starts trading down lower, you would then have a market structure shift over here. And you would then have a potential breaker block here, which we did a rally from that area or take profits. Nice 1 to 2, and then we didn't even hit this low, these equal lows down here. Ideally, you would want to take something off of these equal lows. And then you would also have if you take a fib from candle high to, so this would be a nice 1 to 2 setup with targets below these equal lows. this daily fair value gap high being terminus. We can take a fib. Let's pull the fib. Let's go ahead and pull that fib. Let's just pull it over here. 50% is here, so beautiful target down here. And then we also have from this range low to this high, we have another 50% over here as well, which could be another potential partial. Nice partial here. We can see that's a 1 to 3. Going down to this high, we have a 1 to 4, which that would be another potential area to use as a terminus point. So that's not a bad trade. If you were looking at this inversion and you saw this possible 15-minute order block or another possible higher time frame PDA rate, that would send price down lower. And now in this case, I did not look at this. I was looking for breaker block. This breaker block did not present the way that I wanted it to present. So I took a pass on that position. I only sat down for 8:30, 9:30, didn't expect much, didn't see much at all. I turned it off around about 9:40. I turned it off. And I turned my attention to other things. Remember that we trade in order to have more time on our hands, so we don't sit in front of the charts all day. So let's take a look at the rest of the week. Let's have a glance at Monday morning, if it's going to give that to us. Here we go. Now, Monday morning, as you can see, we were inside of a consolidation. Price did not offer us much. 9:30 opening. Price at this low, high, lower, low. I was not a big fan of this structure over here. Especially that this was a very big range of candles in that area. And I also didn't like the fact that we had this retracement down here. That just made that whole setup. It made that whole setup become a messy set. Whereas if I wanted to see price just continue running up higher through, trading back in once and then running up higher. So I took a pass on this one. If you took this one, you had a slight fair value gap. We have a slight inefficiency over here. And we had a fair value gap over here. Stop would have to be below this fair value gap. So the stop would be there. Take profit. You can look at these highs. That fair value gap. Typical Monday morning price action where we just don't have a lot of movement. Price is slow and takes its time to get to where it needs to go. But that would be one setup. If you were looking for something at the 9:30 opening on Monday morning, then that would be it. As far as 10 o'clock, Very pretty messy for the first few minutes of that 950 to 1010 macro. After that, we had a fair value gap over here, another one there, and the last one there. Trading up higher. Lunch had a retracement below these lows. Took these guys out. Another run higher. No real fair value gap. No real breaker block. Nothing I would participate in, but runs up higher. So they take out the stops of any buyers. They take out those stops below these lows, equal lows here, relative equal lows here. Take them out. Inducement. Get people to get on long. People who sold short had stops above these highs. They got taken out. Induce them long. Break it down lower below this low and that low. Take it down. This would be your PM session open at 2 o'clock. So we rally down. This would be a inversion. We trade down lower. See, this is again one of those sets where if I see this in price, I'm just not going to participate in this specific sell-off here. Just because it's not below the 50% of this fair value gap. So it's the probability just falls off. Ideally, what I would have liked to see here was a propulsion candle running down through this, then trading back into this, but not going above the consequent encroachment. Rejecting that and then giving an entry and then trading down off lower. That would be a setup that I would look at taking. Anyway, that's the first inversion price gives you. Didn't trade back into it over here. It could have done that. That would have been a valid entry. We had a propulsion candle down and then I trade back up. So let's look at this second one now. Now this now becomes we have a valid inversion. Fair value gap. These up close candles would be a order block in my opinion. Look at that as an order block. This down close candle would become a mitigation block. So mitigation block, I'm making that one orange. That's a mitigation block. So that means it's a failure swing. So from high to low, high, low, lower high. Take the low, extend that through. That is a mitigation block. You can see we traded into that mitigation block. Then you can also look at reclaimed blocks. We can look at this order block they used over here to send price higher. We can see we have a big impulse move above that, taking out these buy stops. Let's just give this a different color. Let's make this one red. Make that red. And let's make this inversion. Let's have that be let's make it orange. So that would be a reclaimed block. Extend that through. You can see we traded into it here. We traded consequent encroachment, mean threshold of this reclaimed block. And then a second time over here. Now, most likely, if you're looking at live price action, then this would be the entry. Stop loss. So looking at a stop here, I would be looking at number one, we have a fair value gap over here. We have a reclaimed block. We also have a mitigation block. So our lowest PD arrays are reclaimed block first. Then we have a mitigation block, which would be aligned with this fair value gap. The fair value gap has a higher, look at the high of this fair value gap. See that? That would be just a bit higher than the mitigation block's high. So the stop in this case would be the high of this fair value gap. That's going to be the stop. That's how I would look at the stop. Entry is going to be here when you're looking at live price action. See that? Price trades up. It's 2 o'clock. It rejects from this reclaimed block's mean threshold. It also trades into this fair value gap. We failed to go up into the mitigation block. We didn't even touch the order block. We didn't even touch the inversion. Okay, so note all those things. We take note of those things. So that would be your entry. Somewhere in this candle would be an entry. For take profits, we're looking to short. Right below this low would be where I would look at taking a first partial. That would be a first partial for me. As a second target, I would look at this low right there. That would be a second target. And possibly this low over here, which we didn't hit that. We also have a fair value gap over here. So these are all levels that you would be looking at. If I was in this, my take profit would be at this low. That's a 1 to 2. So that's good enough for me. But you have this would be classified as a relative equal low. They are relative in proximity to one another. So they are relative equal lows. So you could have taken your profits at the lower portion of this low. And note that we have these volume imbalances. We also have this up close candle, which was an order block. So that could be used as a reclaimed block. So that could be used as a take profit. If you extend it through, you could use that as a take profit point. We have a fair value gap. You can use the fair value gap as a take profit point. So a lot of these things are going to depend on what you see as a trader. Not two people are going to see the same thing. Somebody's going to see a fair value gap. Somebody's going to like looking at a low or relative equal lows. Other people are going to be looking at order blocks for taking their profits. Other people are going to be looking at reclaimed blocks. Other people might be looking at opposing breaker blocks for taking take profits. It just depends on what resonates with you. So that would be a beautiful setup in PM session. If you were looking for a fair value gap or possibly an inversion, then you would have this trade. Would have been good for somebody trading mitigation. You got a mitigation block. Looking at a breaker block, this could be used as a breaker block as well, since we do have this liquidity. We do have liquidity above here, above all these highs, there, as well as here. We even traded above this high. We did not get above this one, but we have the relative equal highs in here. So this could be used as a valid breaker block as well. High, low, higher, high. It's just not the cleanest structure where we have a clear and distinctive. As per example, let me see, a good breaker block would be a structure like this where you have a high, a low, and a higher high. That would be the breaker block. You can use this one candle, or you could use the consecutive candles trading down lower. But this is a valid breaker block. Why is it a valid breaker block? Because we took out liquidity. This structure is where the market makers, this move lower is where they bought this thing up, and that sent it higher to take the liquidity out. And what happens is, as it trades down lower, trades back through this, as it comes back to it, this is where they would mitigate these longs. They would mitigate those longs and they would go in short there. So that's why it goes back up like that and goes back to that price point one more time, and it offers that price point so that they can get out of those longs that they used to take price up higher. So that is a nice setup for the PM. You did, however, have about 4 minutes, 1, 2, 3, 4, about 5 minutes of chop, and you had 1 minute where, if depending on where your entry was in this candle, you would be sitting in a slight drawdown with a stop at the high of this fair value gap, which that's still great. You wouldn't be feeling any heat. Price trades up. Breaker block reclaimed. That could be a reclaimed block as well, just because it's sitting on the left side of the curve. Pull that through. And price trades into that, and you get immediate rejection. And that confirms to you that price is trading lower. And the next candle, we trade up higher into this SIBI. Into the low, we closed where? We closed below the low of that. We opened, traded off down lower, fell out a bit, took out these lows. Next candle, traded below these lows, shifted market structure again. Second time, first time was here. Second time now. Confirms that your trade is still good. At this point in time, I mean, then you can take your stop and you can pull your stop into break even, where you would cover fees and commissions. So that even if you did come back and you did take a stop, your fees and commissions would have been covered in that position. And this one would have hit your take profit point anyways. So that's a view of Monday PM session. That's how I would have approached that if I was trading that. I'm not trading that, so I didn't see that setup. I didn't bother to take that. If we look at the later that same PM session, if we look at 1440, not yet 1450, 250, 250, 310, that's a macro. You can see we ran higher. So this little setup right here, this could be used as a institutional order flow entry drill, where we just barely come into this fair value gap, and then it runs off higher. Stop would be below this fair value gap. runs up higher. You can see we easily, let's go ahead and see what we get. If we take a long here, along in here, look at that, beautiful. Beautiful setup. We almost got 1, 2, 3 easily. And then we also have, if you look closely here, you can see we have a fair value gap, and we can see we trade right into that as well. We didn't trade into that. This wick. So we didn't trade into that one there. So that one would not classify as an institutional order flow entry draw. So you got that little small quick set over here. Let's just take a look at the rest of the week. Tuesday, we had this position on. I wouldn't bother taking anything in here. Tuesday PM session. Very early PM session. 1324. We have a fair value gap. Fit into that fair value gap here. So your entry would be somewhere in here. We're going to take some heat. Stop would be below this fair value gap. Need to make at least 20% for that to be a 1 to 2, which would be over here. You're going to be holding a long time, 30 minutes to get that. Not ideal. But that would be a potential trading idea. And we did just end up rallying up higher for the rest of the PM session. We then sat sideways for the most part. Even after opening, we just sat sideways, and then right at close, we just rallied up higher. Let's go over to Wednesday. Now remember, Wednesday we had CPI as well as FOMC, so that is just a monster of a red folder day. So 8:30, we just had sideways, nothing interesting. Rolled it up higher. The first potential for a trading idea would be at 9:30, in my opinion, because we clear this low and we trade into the remainder of this fair value gap. We trade into this remaining fair value gap. Let's just look at it as a whole to see where. So just look at that, and let's just frame this first. Let's pull the fib on this. You can see we traded into 25% of the fair value gap. And let's just frame the remaining liquidity, which would be from there to there. That would be remaining liquidity. We trade into 25% of this fair value gap. We take out this low liquidity. That right there in itself is an entry because we had an impulsive run, a fair value gap. We took out liquidity. We traded into that fair value gap, 25% of it. Rally. Now with this one, the stop is more tricky with this one, honestly. The stop is going to be a bit tricky with it. If you were to take an entry inside of this candle somewhere over here, then the stop would have to be it's going to have to be somewhere between. Now look at the fib, because the fib represents the whole range. I would look at placing a stop below the mean threshold of this. fair value gap. Below that mean threshold, that would be a good place area to place a stop. That's if you take this direct entry right off of this fair value gap, this would basically be a sort of a turtle soup entry into the fair value gap, take out the low, bam, grab an entry. But then we also have the option of having this as a base in the setup. Looking at this fair value gap over here. And then we can look at taking a trade inside of this. Second fair value gap. This one's going to have a lower risk. Take an entry. We have a fair value gap, order block. Stop has to be below the mean threshold. Should be around about there somewhere. We're eyeballing it. So then the stop would have to be somewhere in this area over here. Take profits. First take profit is above this high. That should be where the first take profit's gonna be at, above that high. That's about a 1 to 1.5, which is not wonderful, but it's not the worst. If this setup starts to trade above this high as well as this one, which is a relative equal high, then you could look at reducing the risk. And then that would be a 1 to 2.5, which that's good enough for that set. 1 to 2.5. Let's say, for instance, as an example, if you take this high, but you don't use these equal highs as a take profit point, instead, you use them as a point where you're going to reduce the risk on this position because prices are running above that high, and you got to see how it trades above that high and how it behaves. Now, in this case, it does not behave the best in the sense of that it does not give me that beautiful one, that bam, that propulsion run through this high, which I would have liked to see that propulsion run and then maybe leave a fair value gap, which it just did not do that here. So it's not ideal. I guess it would not be ideal to maybe use this approach, but I mean, nonetheless, still, it would be a wonderful idea with that big of a stop to reduce that stop when we trade above this high, targeting this high, and you flow with that. And if you feel uncomfortable in this position, then you could take a partial above this high. You could take something off. If you were to take something off, it's going to be about 2 3/4 handles. So it's not the best. But if that makes you comfortable and you feel like you're going to be at ease when you take something off of that position and you reduce the overall risk on that position by taking something off, then it's most definitely ideal to take something off there and then hold for the rest of this position, and then you still taking home a nice chunk of the move. But however, let's say that in the case that you did not move this stop up higher, which you should be doing at some point. You should be doing that at some point. Even if we cross this high over here, right before this high, you should look at just moving that stop higher or taking that stop. The other thing that you could do is you could just take the stop, and if we trade above these equal highs, you could just put it at break even, making sure to cover your commissions and your costs. That even if price does turn around and it does hit your stop, you just don't lose anything because you already got your commissions and your spreads. You got them covered. So I think personally, I feel like if I was in a position like this, then if we get above those highs, then I am going into I'm putting my stop in, and I'm covering my fees and commissions. And if I take a stop on that, I mean, I'm not losing anything, so it's not going to be a problem to me. I feel like that would make me more comfortable than taking a portion of it off and pulling that stop closer. And just in this particular situation, I think I would definitely place that stop in even and cover my fees and commissions. And if it comes back and takes me out, then it takes me out. Then it is what it is. But if we continue trading up higher, then you still make your bank, which would then in that case be a 1 to 2.5. But anyway, let's say that you're not gonna bring your stop in, you're not gonna pull up to break even. You want a 1 to 2, which is gonna be here. You're willing to take a partial when we come above this high, which is there. So only when price trades above this high, this is where you are taking a partial, and then you're going to bring the stop to break even. That might be what do you want to do. And if that's what you want to do, then that's what you need to do. You trade according to your plan. And that would be a 1 to 2 then, if you trade like that. And you can see that is that's a massive run. 60 ticks in that particular run. So that'll be a potential trade for Wednesday morning. Let's take a look at the anticipated afternoon. Now look at this. Afternoon session, right on the money, 2 o'clock. Bam, runs down massively. Trades back, retraces back up. So it clears both sides of the board. Anybody that was falling for this and selling short, they had a nice short-term high in place and they just took those guys out. Took all those guys out. Anybody that sold short in this with a stop above that, they got taken out. Anybody that bought this, they got taken out down there too. So we cleared the board, went sideways. And let's see, 230. What do we have? You would still have these equal highs as well as this one. They barely got tagged right there. Just there too, but you still have this one here in place. And you're still on a daily, you are still looking for higher prices. So is there a setup in here? Let's see. 250 to 310. That's going to be the cleanest setup you're going to get. I mean, looking at this, I mean, there's nothing in here unless you want to get chopped up. There's nothing specific. Nothing clean, no clear low, nothing specific. Most likely this fair value gap. And now let's frame this. So we have a fair value gap. We have a low, high, lower, low, because we do take out these lows, the stops. So that's a breaker block. We also have a inversion. So we have a fair value gap, breaker block, inversion / order block. So that gives us a basic framework. Entry somewhere here. Stop has to be below this. So see that? Pretty big stop as well. But you have fair value gap, breaker block, inversion. Stop has to be at the low of the inversion. Wednesday PM session. Let's see if we can frame a higher time frame PDA array off of this set. Wednesday, 2 o'clock. Yeah, we can. Let's just see though. It's 250. It's gonna be this run here. We still can though. This 15-minute fair value gap. We trade into that. We have a wick. Look at that. Let's run down to a lower time frame. Let's go to Wednesday PM session. That's 250. So right about there. Let's jump ahead. Here we go. 15-minute wick consequent encroachment. Just take this to the bottom. Beautiful. That is a beautiful higher time frame entry level. So we hit this, we hit stops, we start running. Fair value gap, impulse move, market structure shift. Entry, stop, for take profit. Take profit's going to be above at least this high. That high there is going to be take profit. And if we want to do a projection, let's see if we can do a projection on this. See. Let's take this manipulation, high to low, because we took out the stops. So it's manipulation. Let's see if I have a projection, and let's see if we can just use a projection of this range. So 1 deviation, 1.5 deviation. Let's just turn this fib around because it's going to confuse some of you. Turn this thing around. So there is 1 deviation. Let's just get this so we can actually see. So 1 deviation is here, 1 standard deviation. We're looking for something above this high. That's going to be this deviation, which is going to be 1.5 deviation higher. So that's going to be that's another potential. If you don't want to take it that high, you can take something here. We can also look at 2 deviations higher if it wants to run up higher. You can look at the price point, and we can take this. That gives you a 1 to just under a 1 to 2, which this is still that's a respectable setup. Look at the amount of ticks you get. You got to take the amount of ticks you get into consideration. So even just taking something off right above this high, leaving it a 1 to 1, 35 ticks, that is a solid win. And again, we can apply that same theory of if price runs above, let's see, above this high here. We respected this fair value gap. Okay, that was our entry. Break, we respected this. As soon as we run up and we clear these highs, if we clear these highs, what do we have? We have a order block. We trade into the order block right above the highs. So that allows us to narrow down the stop, and that increases the potential reward that you get. So you need to trade according to the risk that you're putting on the board. Take a proper position sizing and take something that you are going to be comfortable with, that you're going to be okay with. If you take a loss, it's not something that you're going to go home and you're going to be pissed off because you took a loss. It's going to be something that you feel it's just another day and the setup just did not pan out. You followed your model, took a loss, and that was it. And then you're going to go back next week and you will easily be able to make back what you lost. So you could do that and have 1.5 deviation. I feel like that is solid. That's a good position. Reaching for more, that's, you don't want to aim too high at the end of the day. It is 35 6. But what you could do is you could look at how it trades around this area, and what you get is you get this relative equal high. Relative equal high, what do? We trade back into the order block. So if you were willing to sit through this, should be taking a partial at least then. Should take a partial, even if you just move the stop up one, take a partial, sit through this. Maybe you add a position on. That's something you could do. Or maybe you don't feel comfortable adding a position on. Then you look how price trades around this level, and then we move away from this level. This confirms that the trade is still good. Look for it to trade above this high. This would be another partial then. Okay, if you added a position, then this is a partial. You look at this. Price gave you another fair value gap. Did it respect the fair value gap? Yes, we closed above it. Good. Did we rally? Yes, we rallied. What do we have over here? We have up close candle. Did price respect the up close candle? Yes, we did. We should have touched it. We moved away from it. We touched it. We moved away from it. Has to rally now. What did it do? Started rallying. Rallied higher. What's it targeting? 2 deviations. Target would be hit. That will be 50 ticks. So you have to look at price action. And if you took most of the meat off and you left small portion on, what do we have? Another order block. How do we trade? We move away pretty impulsively. Do we come back? Yes, we do. Does price respect that? Yes, it does. We move away. What happens? Consolidation or one candle down. This would be a institutional order flow where it just closes in that gap right away. Do we rally? Yes, it does. Order block. Trades into the order block. Do we rally? Do we respect that? Yes, we closed above it. We rally. So that's how you keep on managing the position. And obviously, as you start managing it like this, you're going to be aggressive. You're going to pull the stop and you're going to keep your stop. You're going to move it higher, move it higher, move it higher each time. So continuing to look at this price action, let's see what Thursday had to offer. So let's see, Thursday. Thursday morning, we didn't have much. We had this run in the morning, really early. We basically had this move back into this run with a retrace, pushing up higher, reaching for these highs. Now looking at this 8:30 and looking at the calendar, Thursday we had PPI 8:30, so that is a expected news release. We didn't have much price action that was clean leading up to this massive run. So this just is not something that I would be looking at to take any positions in, because there is just nothing clean here. The only thing you could be referencing would be this fair value gap over here. But at the same time, this fair value gap would have still been a messy position to be in. Even if you were inside this, we took out these lows, roll it into this fair value gap, consequent encroachment. You can see that we wicked through down at the bottom when we turned it up. I was actually sitting down on Thursday and I was looking for something at 8:30, 9:30 because we had this news event. And as we opened up, the first thing that we did was we opened up, we traded down super fast, and then we traded up higher really quickly. So, I mean, just even getting into this position, you would have really had to be very quick to take an entry. You would have had to be super quick to place a take profit. It was instantaneous. It shot down, shot up, and that was it. So you would have had to get in. You wouldn't even be able to place a take profit, and you would just have to manually close that position instantly. So you wouldn't even be able to place a stop. So in my opinion, looking at that live, it was just not worth taking any trades in this. And it did not present my model. So I just didn't take any trades in this. So I just left that to take a pass. Looking at the downside of that, not much worth trading. Look how messy the price action was afterwards, 9:30. We had a bit of a run up, nothing worth taking in my opinion. 10 o'clock open. We did have a fair value gap here. And this does classify as a breaker of high, low, higher high. We also have this little fair value gap we traded in, and we had this. I would look at these two candles as the order block. And we basically traded the mean threshold here. And we had a slight little gap in there, barely noticeable in that area. So you do have that at the back backing you up. And you also have high, low, higher, high. So that would also classify as a breaker block. As you can see, that lines up with this one. But we had no trade back into this. So you would have had to look at other opportunities. And then the other thing is that we were looking for bullish price action through the week. So this would be counter trend trading, opposing your daily bias. So you would have to keep that in mind, and that would mean that you would have to go in with lower risk. So lower risk on these positions. If you did take a short, You do have equal lows over here, so that makes it viable for a trade down there. We'll also have some relative equal lows over here. But again, I would have liked to see a return back. Although you would have to look at alternative entries to get into this move. We do have a fair value gap over here, which priced the trade back into this and then rallied lower. So that's a viable entry to get involved in the move down lower. Still had meat on the bone. You took that entry. You still had a bit of meat on the bone. Was it worth it? Not a lot of meat on the bone. But if we quickly, let's scroll this up to a higher time frame. Let's go to a 15. Let's look at Thursday. Let's look at 10:15. Let's just look at this. So 10:15, my eye goes right to this fair value gap. So that's what I would use as a target. Let's go back to a 1 minute. Let's go back to 10:15. Okay, so looking at this, see that beautiful rally down there. Now, if you got this premise in mind, it's always this gives you a predetermined range. So what I could do is we have the high right there, although we didn't really start running. We started running over here. We had this below us. We had a impulse move right there. Let's just bring this up closer. We have an impulse here. So I look to the left of the impulse. Look where we really started running. So that could be this high. And then we have a predetermined range down to this fair value gap high, 15-minute fair value gap high. Let's just mark this. There we go. Bring it out just a little bit. So there we go. That gives you a predetermined range. So you can see, look if your setup is viable, 50%. Yes, it was just above 50%. So this is still a viable setup. Still a good position to take a trade. What do we have above us? We had a fair value gap. We had a breaker block. We had another fair value gap. Let's see where the stop would hypothetically be if you took this trade. Let's see, you took that trade somewhere in there. A really good place to put the stop would be at 50% consequent encroachment of this fair value gap, which would also align with 50% of this breaker block. So I feel like that is a good area to place a stop. And we also have a volume imbalance, slight volume imbalance over here, as well as down here. So those are things you could look at. We also had this breaker block over here. So those are extra confluences that you can look at, but that's a good place to place a stop. If you want to give it more breathing room, then your stop is going to have to be at the high. And for you to get a viable setup, you're not going to get more than a 1-to-1 or 1 to 1.5 on this, because this would be the projected take profit. But we could dig into this fair value gap. You could anticipate a 25. You could put this in quarters, and this would be like from the high to consequent encroachment. You have a 50% over here, which we did hit. So if you were looking for those quadrants, then you could have targeted something there, which that would give you a 1-to-2. We did later in the day go through and go to the lower quadrant of this fair value gap. So it just depends on how you approach this. There are multiple ways to approach this type of a setup. You might feel more comfortable with having a bit of a lower stop, getting involved with the move. This gives you a 2.5%, just about, or 2.25%. That is one way how you could get into this trade. The other way would be this order block. See how we trade into that order block 2 times. We come into it twice. For the stop, you have an order block, volume imbalance stop would basically be here. So you see that's just about a 1 to 1.5 on that position, unless you were then looking at these quadrants and maybe you took a partial at this high of the 15-minute fair value gap, and then you were looking at this quadrant, which would then give you a 1 to 2. So it's always important to use proper risk management with your setups. You could go in having a 1-to-1 using proper risk management, and you could still make a profit from that specific trade. And we are trading against higher time frame directional bias. This would be a session liquidity trading idea. So that would automatically lower your risk management. You should be thinking, okay, I'm lowering my risk management because this is opposing the directional of the higher time frame. But however, we do have equal lows. Equal lows are always a good sign. In my case, equal lows or equal highs always give me some sort of a directional bias on a lower time frame. And if you look at this, this would be very one-sided since there are no equal highs above this price. The first thing I see is these equal lows over here because we already took the buy side out prior to that and we sat inside of this fair value gap area here. Volume imbalance, right into that right there. See that? So in my opinion, equal lows, 15-minute fair value gap below us, it's going down. You already have this impulse. You have a high, lower high, lower high. So these are failure swings. So this indicates it's unable to go up, take out this high, unable to go up through that high, unable to go up through this high. Bam, impulse. So that right there should tip its hand at you and say, okay, look, we're failing to go higher. We're trading below. Real big push below. Everybody's trapped in longs because we took out the highs to the left. Traded into fair value gap, volume imbalance. Held that low. Look at this. Lower. Low formed. Traded lower. Traded lower through these lows. Took this liquidity. Bam. Grabbed the rest of the liquidity. Fair value gap. Off to the races. Now, what I want to look at here is I want to go ahead and look at the averages with this and compare these highs. So we have 9:40 to 10 o'clock highs to compare. So let's look at those. So if we look at this, 9:40. See that? We have the same idea here. Lower high, lower high, lower high. Let's look at the Dow and compare its relative highs. So 940 here, lower high, lower high, lower high. Okay, so all of these are indicating weakness. So looking at dollar index, we want to see ideally higher highs. So see that? We had a rally. So everything is aligned for us to get a decline. Everything is in check for us to get a decline. Sometimes it happens where you have one of the averages posting a higher high and the other two posting lower lows. Then that is something that I like to see usually, because it tips its hand and it tells me that, okay, so that rally higher is a false rally higher. It's just a rally to take out the stops and then go short. But in this case, we have lower highs on all the averages. It's a symmetrical marketplace, and we have dollar index pushing off higher, refusing to make a lower lows. It just rallied right up higher. So beautiful market, beautiful price action supporting this idea. Time of day would be nice, 9:50, 10:10. Beautiful rundown lower. That would be a nice scalp on Thursday morning to take that trade. Nothing else for the rest of that session that I would be interested in. Lunch. So in lunch, everybody that went short had a stop above this high, as well as this one. Those were taken out. Fair value gap. Fair value gap. Price traded into the lower fair value gap. We traded into 15-minute higher time from fair value gap. That gives us bullish premise. We had a impulse move higher. Trades back into it. 10:50 to 11:10. This would be the macro zone that you'll be working in, even though we do go outside of the scope of that. That would be what you would be working inside of, targeting these highs. Fair value gap. We did not reach that fair value gap, but that would be your targets. Fair value gap. Let's just look at this and see if this position took this entry here. The stop would have to be, see, we have this fair value gap as well over here. We displace above that high. So in my opinion, this would be the ideal scenario, because we get confirmation, impulse. This would not be a fun position to be sitting inside of. Macro time is behind us as well. So we have this structure behind us of a fair value gap. Extend that through. We sat inside of that. We took out these relative equal lows. So stop, we have fair value gap. We have an order block, and we have another fair value gap. So the stop could go below this fair value gap. So we can go for a stop down at the low, or a stop at this low, this high, that low, sorry. So this would be the low of the fair value gap. So that could be an area to place a stop, take profit above this high. We have a 1 to 1 3/4, so that's not bad. And then we could be targeting this fair value gap over here. Pull that through. Target this. See that? That is a 1 to 2.5% on that setup. So that's a nice run if you're looking for that idea. That's a nice setup. Then we also have another set over here at 11:50, 12:10. Look at this fair value gap. We have a breaker here, high, low, higher, high. Which through all that, never comes back to it. Inversion on the left over here. Extend that through, which becomes a balanced price range. We don't trade into that. Fair value gap, it holds. So your entry would be somewhere in here. Short position, let's say you waited for price to rally back down below that, consequent encroachment. Trade back up into that. That's a nice entry right there. So for a stop on this, we would have a fair value gap, another fair value gap, as well as an inversion. So the stop would be at the high of the inversion. That's where I would place that stop. Note we have the breaker block from high to low. See how the breaker block is also overlapping. So that's another confluence. For targeting, you would be targeting this low, consequent encroachment. So my first target would be this low with take profit there. This is a nice setup. You do have another entry here in this fair value gap over here, which would also be a viable entry to take this position. And then if we quadrant this fair value gap, then we also have a lower quadrant. If you wanted to take something here, then that would be a 3 and a 3.25 profit there. So that is a nice viable set. As far as the afternoon, there is not much that I would see here. You do have a turtle soup taking out these lows, stabbing into this 15-minute fair value gap. You have this fair value gap as an entry, although that is a very messy entry. The best case scenario here would be this turtle soup entry. And if you were trading a fair value gap, then most likely you would not get an entry with this particular setup. Let's take a look at Friday. Friday, notice that we spike into this 15-minute fair value gap consequent encroachment on early AM open, 7 o'clock. We step into that and we trade off of higher off this. Not much seen for the 8:30 or the 9:30. We do not have anything that would be classified as a clean set. Low, high, lower, low, breaker block. And in this case, there is no fair value gap. This would be an order block. We trade into that. We trade into its mean threshold. We do a rally off higher. So perhaps that's something that you would take. Nothing clean at 10 o'clock that I would look to take. And we basically sit inside of this chop on Friday. If you notice, we only have 10 a.m. prelim UM. So not much news going on. And we basically just sit and chop. Turtle soup here, taking out this low over here. Back into this order block. That might perhaps be a viable entry for a setup long targeting these highs. You can look at that in your own studies. Then we also have another order block in this area with a fair value gap. Extend that through. That's a potential small setup. 13% is offered. Then we do get another rally at So this move could be used over here, low, high, lower, low. So that could be used as an order block / inversion entry as well. Just about 5 handles. Not bad, but not a very clean position either. And it's also at the close of Friday. So that would conclude the review. Hopefully you have found this one insightful, and hopefully you have learned something from this. Until the next one, good luck and be safe.